Welcome back to the Investors Center podcast. I'm Isiah, and if you caught episode 1, you'll know we kicked things off with one of my favorite crypto stories, the guy who spent $1 billion worth of Bitcoin on 2 pizzas. If you haven't listened to that one yet, go back and check it out. Now, in that episode, I mentioned that this podcast would be about sharing stories, facts, and lessons from the world of money and investing. So today, I want to do exactly that. I'm going to share 5 lessons from 5 of the biggest names in investing and break down how each one applies to you if you're just getting started in the UK. Before I get into it though, I do want to be clear. Nothing in this episode is financial advice. We're not financial advisors. What we are is a team that spent years in the market, tested dozens of platforms, made plenty of mistakes early on, and learned a lot along the way. So everything I'm about to share is based on our own opinions and experiences, combined with the wisdom of people who've done it at the highest level. Always do your own research before making any financial decisions. With that said, let's get into it. Let's start with the most obvious name on this list, Warren Buffett. The man is worth over $100 billion. He's been investing since he was 11 years old, and he's been saying the same thing for decades. One of his most famous quotes is, "Someone is sitting in the shade today because someone planted a tree a long time ago." And what he means by that is simple. Investing is not a quick thing. It's not supposed to be. The people who build real wealth are the ones who buy good investments, then just leave them alone for years. Buffett himself has said, if you aren't willing to hold something for 10 years, don't even think about holding it for 10 minutes. Now, in the UK, this matters even more because we have access to a stocks and shares ISA, which means any growth you make inside that account is completely tax-free. So not only are you letting your money grow over time, you're keeping more of it when it does. That's a huge advantage that a lot of beginners overlook. The second lesson comes from Tony Robbins. Now, Tony isn't a fund manager or a Wall Street trader. He's a performance coach. But his book, Unshakable, is one of the best-selling personal finance books ever written because he went out and interviewed 50 of the world's top investors and distilled everything they told him into advice that normal people can actually use. And the one thing he kept coming back to was this. He said, the real route to riches is to set aside a portion of your money and invest it so that it compounds over many years. That's how you become wealthy while you sleep. The key word there is compounds. And for anyone who doesn't know what that means, compounding is when your returns start earning their own returns. So if you invest £50 a month starting at age 20 and you average a reasonable return, by the time you're 60, you're not just sitting on what you put in. You're sitting on decades of growth on top of growth. The earlier you start, the more powerful that effect becomes, and you don't need a lot. Tony himself has said the most important thing is just to get started with whatever you have. A quick one before we carry on. If you're thinking about getting started, we've put together a list of the best UK investment platform sign-up bonuses. The link's in the description. Some of them are genuinely worth taking advantage of, especially if you're opening your first account. So go and check that out. Lesson 3 comes from Ray Dalio, the founder of Bridgewater Associates, which is the largest hedge fund in the world. And Ray's biggest piece of advice is about diversification. He discovered that if you can find 15 uncorrelated investments, meaning investments that don't all move in the same direction at the same time, you can reduce your overall risk by 80%. 80% is a staggering number. Now, you don't need to go out and find 15 separate things. For most beginners, a single global index fund gives you instant diversification across hundreds of companies, multiple countries, and different industries. The point is, don't put all your money into one stock, one sector, or one country. Spread it out. That's not just Ray Dalio's advice, by the way. Every serious investor on this list would tell you the same thing. Number 4, Peter Lynch. He managed the Fidelity Magellan Fund and averaged 29% returns per year for 30 years straight, which is one of the best track records in the history of investing. And one of his most famous quotes is this: far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. What he is saying is, don't try to time the market. Don't sit on the sidelines waiting for the perfect moment to invest, because nobody, not even Peter Lynch, can predict when the market is going to drop or when it's going to recover. The solution is boring, but it works. Set up a monthly direct debit into your investment account. Invest the same amount every single month, regardless of what the market is doing. It's called dollar cost averaging, and it removes all of the guesswork and all of the emotion from the process. And the fifth lesson comes from a man called Jack Bogle, the founder of Vanguard and the person who invented the index fund. If you've ever heard anyone recommend a low-cost tracker fund, that idea started with him. And Jack put it best when he said, "In investing, you get what you don't pay for," which sounds like a strange sentence, but it makes perfect sense when you think about it. Every pound you pay in fees is a pound that isn't compounding in your account. And over 20 or 30 years, even a 1% difference in fees can cost you tens of thousands of pounds. So when you're choosing a platform or a fund in the UK, look at the numbers. Compare platform fees. Look at the ongoing charges figure on any fund you're considering, because the less you pay in costs, the more your money actually goes to work for you. So there you go. 5 investors, 5 lessons. Think long term, start now with whatever you have. Diversify, don't try to time the market, and keep your costs low. None of these people agree on absolutely everything, but every single one of them agrees on those 5 principles. And if you're just getting started in the UK, honestly, that's all you need to know to be ahead of most people. This is the kind of stuff we're going to keep covering on this podcast. Stories, lessons, and practical advice from the world of money and investing. So make sure you're subscribing or following on whatever platform you're listening on so you don't miss what's coming next. I'm Isiah. Thank you for listening to the Investor Center podcast, and I'll see you all in the next one.